Andy Hill from Every Rates. We are having a little bit of a discussion around what the 50 basis points rate drop means for today, why it happened, and more importantly, where it is all going in the near future. And is it the time to buy and or get pre-approved, prepare? Everyone's at a different journey. Andy, welcome. 50 basis points. Where did this come from? Not a lot of surprises. Why is that?
Yeah, I mean, it's been back and forth again on these rate cuts. Um, we thought for a while it wasn't going to be a full 50. We thought, there was a chance at one point the Bank of Canada wasn't going to cut. And here we are, 50 basis points. Things are looking really good. Inflation is right where they want it to be. So the question is it going to stay there? You can see today in the economic report from the Bank of Canada that they expect inflation to sit around here for the next 2 years. If
Mhm.
that's the case, then we are going to come in for a nice hot landing somewhere below 3% as the policy interest rate without any deviation from that. Yeah. So pretty interesting stuff.
Awesome. And I guess forecasting here, I mean, I saw an article, RBC, and both BMO seem to think another 50 basis points are coming in December. Wishful thinking, or where do you see that? And of course, the forecast till the end of 2025.
The numbers for like the Canadian economy, inflation, consumer spending are looking not like that good. So,
Hmm.
the one of the reasons why we had the intense rate increase that we went through over the past few years was because the rates went up, or the inflation they were behind on the curve. And so they had to catch up. And like potentially they've held rates high for too long.
Of course.
Potentially, it's hard to know. But and if that's the case, then the like economic fallout of that is going to result in them having to cut a lot faster than they think. So in that kind of chart example, if we fell down to like a 1% inflation figure or less, they are going to aggressively cut rates to ensure we don't go into any sort of like deflationary environment. So
Hmm.
um, yeah, TD came out on Monday and said that they were expecting a 25 basis point decrease
Hmm.
today.
Hmm.
So there's a
Wrong.
lot of 50 today was kind of the Goldilocks zone. I
Hmm.
think next cut could be 25 or 50, depending on the data. I think they don't want to cut too aggressively
Hmm.
in order not to stimulate again, but they
Right.
want us to
Like
kind
the
of
70s.
fall.
Like
Yeah,
in the
they
70s that
exactly.
happened, right? Went
Totally.
down, then shot back up. We're not
Yeah,
same
so
era, but
they're well, that's the thing. And so unless the data really cools or the data really like heats up, and if it just kind of stays at the landing strip that they're on right now, then we'll be fine, and things are just going to gradually tick down. But if the data cools substantially, like if the data in November comes out weaker than expected, we can expect 50, or 75 at the next meeting.
75 basis points, you think it would be possible?
I mean,
Or
if the data was like really
wow.
bad, right? Like if the
Yeah,
data
right.
showed
Okay.
that every time like every time the Bank of Canada does their press conferences, over the past year and a half, they've always been very cognizant of the strain that they're putting on the economy. Um, and so they know that there's strain out there.
Hmm.
It's just a question of if the data is showing that strain, you know, outside of the band that they're expecting. Um, so if it did, they would act accordingly and cut rates very aggressively.
Love it. Yeah, good explanation. Last question, most important perhaps. Both of a lot of our realtor and financial advisor partners, and of course their clients, our clients, are thinking about the timing of things. You ran a very specific survey that actually says that we might be 75 basis points away until the mass market really gets more aggressive and gets off the sidelines. Maybe talk more about that.
Yeah, we ran a survey of 1,600 Canadians looking at uh, how quickly they would get off the sidelines if the Bank of Canada cut today, and how, you know, low would the Bank of Canada have to cut in order to start stimulating them to get off the sidelines.
Mm-hmm.
Um, of those 1,600, about 50% of them are kind of interested parties, and 74% of that 50% would be like getting off the sidelines with a policy rate of 3% or less. So right now we're at 3.75%,
Mm-hmm. Mm-hmm.
and expecting, potentially by, I mean, at least I feel like by spring 2025 we'll be there regardless. Just a
Mm-hmm.
question of if we get there before that.
Mm-hmm. Mm-hmm. Got it. So reading between the lines, between now and spring could be a very interesting time, obviously, to take some swings. Andy, really appreciate the insights. Any last thoughts or words for people who are trying to read between the lines of today's very exciting news of 0.50 decrease?
Yeah, I mean, it's a perfect time if you had gotten a mortgage in the last couple years to look at, does it make sense to break this and move to
Mm-hmm.
something else?
Right.
Be it convert to a fixed from a variable if you're like potentially.
Mm-hmm.
More likely, it would probably be converting from a fixed to, yeah, converting from a fixed to a variable would probably be like the
Mm-hmm.
most cost advantaged strategy that could work,
Mm-hmm.
especially if you locked a rate at like 5% plus.
Right. And the interest rate penalties right now aren't exactly at massive levels on the fixed side because the posted rates haven't dropped a ton just yet. There's a lag with that. So
Exactly.
that's
The
something that we'll keep
Goldilocks
up.
zone. You need the
Right.
Goldilocks zone to do it. And we're right in that. And it'll pass as soon as the yield curve flattens out. So,
Yep, definitely. Andy, thanks so much, man. Keep up the awesome work, and I'm sure people will be following closely for the next one.
thanks for having me. Yeah,
Of
have a
course,
great
our
one.
pleasure. You too.